matter at hand is the ease of doing business. And we have here, I think I'm intimidated when you, and I wonder why there's no lady here. We have to, we have to do something about this. But we have here to discuss the ease of doing business, starting from very close to me, Dr. Gbenga Adeoye. He's a lawyer and a chartered accountant right here. And then next to him is, well, we know him, Managing Director, Chief Executive Officer of Coleman Wires and Cable, Mr. George Onofowokon, a familiar face in our conversations right here. And the tax man, I don't know how many people are friends with, Mr. Taiwo Oyedele, the tax man. We know him, he's the Chairman, Presidential Fiscal Policy and Tax Reforms Committee. And then next to him, the employers, Director General of Nigeria Employers Consultative Association, Mr. Dewali Smart Oyerinde. And then next we have Chief Economist of Nigeria Economic Summit Group, Dr. Olusegun Obishakin. Welcome, sir, to the program. And then MAN, Manufacturers Association of Nigeria. So we can expect to get an overview. Maybe Mr. Onofokon will say one part of it, and then the MAN DG will now tell us, Mr. Segun Ajayi Kadri. Thank you so much, gentlemen. It's obviously a pleasure to be able to host you all. So, talking about the ease of doing business, and it's a common phrase here now, and all of that. Perhaps we should find out the reality of it with someone who has a first-hand experience. Mr. Onofowokon, has this message really been practiced?
First, happy independence to everybody. The reality is no, if we have to be blunt, no. And I think we have a big capital no in recent times. Speaking to our dear brother Taiwo here about fantastic initiatives that are coming out from his committee. But it's good for it to come out. It's another thing for it to be realized by the manufacturers and for us to see the instant benefits. And simple ones, as simple as what we're talking about earlier with him, and we're talking about just importation. And you have this inconsistent, I still do not understand how the customer has become bureau de change. I don't think the philosophy of any custom anywhere in the world on fiscal policy is to balance. It's not a monetary policy, IGL-driven customs. It's only Nigeria that our custom is IGL-based. And that's a big mistake, big error. And until the day we realize that customs is there for fiscal balancing, which is why the customs is under the Ministry of Finance, not under the CBN. It's done on purpose, so that the Minister of Finance can carry his fiscal policy role through them where necessary. And that's what they're supposed to do. But now we're turning them into an IGL-based, and it's affecting the manufacturers. So that's one. Secondly, when we talk of the ease of doing business, every time we have inconsistency in policy that is not driving manufacturing, processing, and productivity, you get a knock-on effect, because the reality is the biggest employer of labor are these people in the industry, from small scale, medium scale to large scale, irrespective. Take their numbers together, they literally generate the jobs. Now, if we don't see that they are the key and we're killing them, you're getting negatives. And sometimes you see a lot of policies coming out, but you don't see the speed at which they action them. The simplest things like the withholding tax issues, which was driven by his team again, that got implemented almost God knows how many months after they actually said it. But guess what? I had to ask him one time. I said, immediately that policy came out, signed by the minister, the next thing I had one company query that same document, saying, yes, we see that the minister has signed that withholding tax, no manufacturer will charge. Where's the Gazette? The first time I actually met with him, I asked the same question. Please, my brother Taiwo, where's the Gazette? He too could not understand what that means. The minister signed, and someone is waiting down there saying that there's no Gazette from the Ministry of Information. That has nothing to do with that policy. And you keep talking about the ease of doing business. I keep saying it is good for us to have policies, statements, I think sometimes fiat by the media team from the presidency. What we need is the reality of what those policies action into reality of how manufacturers improve productivity, capacity utilization of their businesses on a daily basis.
All right, Mr. Oyedele, I think you have been implicated. You have been implicated, Mr. Oyedele. So we hear you here. You have told us how you're going to collapse about 40 taxes, and even when it's signed, as he said, we're asking for the Gazette and all of that. Is your committee looking at the process that will actually bring the implementation? I know the last conversation I had with you, you did say that by next year, we should expect to see those reforms having gone through those processes. But is your committee actually dealing with those gaps that stop the real implementation of these beautiful ideas?
Yeah, thank you very much. So the good thing is everybody on this panel, we're on the same team. So it is not us versus them.
So you feel safe?
Yeah, I feel very safe. I feel very safe. And those points are very valid. One of the things we have realized is we're actually all very patient, including myself, and I wish some of our recommendations have been implemented like yesterday. So essentially, when you're talking about the ease of doing business, it's one of the 3 pillars of the work of my committee, along with so many Nigerians who are members of that committee, putting in everything they can, without asking for anything in return because they love their country. And that gives us hope. We have seen some of the processes within government are very slow. The bureaucracy can be better. So one of the positives is that by going through this process of trying to do a holistic fiscal reform, we've also identified those areas where we can make things easier, and such that next time when there's an approval by the government, almost immediately you can feel the impact. I do have some good news. The good news is that the withholding tax regulation has now been gazetted. So tomorrow...
I think we should give her a round of
So the only reason why it hasn't been published today is because it's a public holiday. So first thing tomorrow, you will see a copy of the Gazette. And that provides a lot of relief, not just for manufacturers, but also for almost every other business in terms of taking away some of the burden about funding their working capital, given that interest rates are now quite really high. And also for small businesses, getting the exemption from the compliance for withholding tax. I would also tell you, and many people know this already, the economic stabilization bill is also something we worked on for many months. On Monday, it was approved by the Federal Executive Council. That's also good news. We expect in the next couple of days it will go to the National Assembly, and then it will begin the journey. And we have the commitment from the lawmakers that they would apply the speed that is necessary. The other point that my brother raised around our recommendation that the Customs Service should use a fixed exchange rate that is much lower than the actual rate hasn't been implemented. And it's a number of factors, the biggest one being that the Nigerian Customs Service law was repealed and reenacted in 2023, which is last year. And in that law, it says that the exchange rate to use for custom must be the official exchange rate. So which means even though we drafted an executive order, the president cannot just sign to override the law. So we then have to go through the process of trying to change the language in the law so that when this becomes necessary, maybe later in the future, it will not be as complicated as it is now. But I think there's a general understanding within government that these interventions are extremely important. In the economic stabilization bill, we are focusing on 3 major areas, which is inflation, how do you bring it down? And we have significant measures in the bills you're going to see in the next couple of days at the National Assembly in that regard. We have measures around exchange rates to strengthen the naira and then to also give stability to the currency, and then employment to be able to generate employment, particularly for our youth. and also to remove the bottleneck around how businesses can grow and therefore create more employment. So there are lots of, things that are moving now. We're beginning to see more progress. I'll say let's keep the hope alive.
Okay, well, let me come to Mr. Kadri, DJ of Man. I know you're on the same team, so most likely you will say, oh, yes, all this matters, and we are hopeful. But, I mean, we know there's the lag when policies introduced and when we feel it. You are dealing with people in the real sector. How expectant are you, even beyond the tax, that Mr. Idele is talking about? We have other areas, that has impeded the development or the way that business people would like to do, and you deal with your members from different sectors. How hopeful are you, in all of this policy and reforms?
Okay, thank you. It's really a pleasure to be here, and I say Happy Independence Day to Nigerians. We hope that our economy will become more independent, and that we'll be able to harness all the resources that Nigeria has. I can't imagine any other nation that is better blessed than Nigeria. And someone said, God must be in Nigeria. But in spite of everything we have done to destroy ourselves, He has always kept us. I think we should be grateful for that. Essentially, manufacturers are very expectant that the changes that are being introduced get traction quite quickly, and also that low-hanging fruits that are, in fact, I don't think the fruits are hanging again. They are literally on the floor, and we just need to pick them. My chairman on the fiscal policy and tax reform has mentioned some of those things that are needed like yesterday. So it is very refreshing to see that bills are going to be speedily enacted, and that all those measures that requires the executive, that the executive arm of government, represented by the president, to sign, come to fruition. But when you talk about the ease of doing business, you need to talk about the cost of doing business. And I think that has tended to override the seeming progress that we have been making in making it easier to do business. So it's easier for you to register businesses and to get your regulations passed, but then you die soon after because of the cost, and that becomes a wasted effort. So, and there are actually quite a number of things that wouldn't require enactment, wouldn't require executive orders, and they impede manufacturing performance. One of them, very easily, is this issue of forex. And what we have said is that Nigeria need not suffer endlessly, especially the productive sector of the economy. We don't really also have to depend on the sale of oil for us to be able to get forex. First, we must realize all the incomes that we can get from oil. And we shouldn't have any impediments, whether human, structural, or system imposed. I mean, we should be clear about it. It's our natural resource. We should fully recover all the, let me even use the forex that we can get from there. And we need to address the issue of diaspora remittance that has a very great potential of bringing in far more forex than Nigeria is receiving. Those ones can help to address the foreign exchange challenges that we have. And there's one presently that I still cannot understand why we've not been able to overcome it, and it's the 2.4 billion naira unredeemed forwards with the CBN, which I think is very important. I believe that it will require the intervention of Mr. President, because I have a member, for instance, who has lost 7.2 billion naira because of this forex exposure, for no fault of his. And 8 of our members, because of their forex exposures, have actually lost 918 billion in the last 1 year. So I think there is need for us to look inwards and see those pressing issues that we can really deal with without without requiring enactment of laws and the president signing executive orders. So manufacturers generally are hopeful that if all these reforms kick in and those remedial measures that have been taken to address the dislocations that the reforms have brought are speedily implemented.
Let me bring in an accountant, especially since you've brought in such huge amounts of money, Dr. Ogbenga Adeoye. Forex is, I mean, we saw companies declare losses last year because of Forex. And then the banks that made the profit, we see them, they're now being held down with 70% windfall tax. Is there ever a way out of this Forex? We know that a country like India, they live majorly on remittances. We have a lot of Nigerians outside the country, but it does seem like even when the Forex come into the country, it is not captured. You know, how do we find a balance with this Forex issue?
Okay, let me just state 4 things first as a major problem, because you need to know where you're coming from so as to know where you're going. Number 1 is that the Nigerian government have not actually studied what they call in medicine drug-drug relationship and drug-food relationship, which is policy-to-policy interaction and policy-to-reality interaction. So when you say, oh, we're floating the Naira because we don't want what is happening around tripping, you then have to look at what is the reality on ground. And so in medicine, when they give you a particular drug, they say, if you take this drug, you cannot take the other drug. If you take this drug, you cannot take a particular food. So I don't see us having increase in interest rate at the same time with Naira being floated, custom applying the same exchange rate, and then you think we're going to see improvement. And as a matter of fact, what the DG man said is that you may die before your time. So that's why when you see adverts of drugs, they will tell you, take this in the morning, in the afternoon, and in the evening. And then they end it by saying, if symptom persists after 2 days, consult your doctor. The government need to look at the symptoms in the economy. If you borrow money outside in dollars, and then your revenue is in Naira, and then you need to pay back this loan. So if you had a loan of $1 million that you need to pay before, which at the CBN exchange rate used to be about 460 million naira. I used to talk to him. Taiwo is our friend. We are all friends. And I've told him at a time that he needs to start wearing bulletproof, either bulletproof car, bulletproof clothes, because the citizens are actually interested in the reality on ground, not the theory. Yes, the policies are good, but you must note that before you start getting the fruit, the people must not die. And companies are dying, companies are closing down. I'm in practice. Taiwo have been in practice. We've had cause to work together, even in tax reforms. I believe with the numbers that we are seeing, I see numbers every day. So you had $1 million interest to pay, for example, and you needed 460 million naira to pay. But now, he has loan too. You need 1.6 billion to pay that. How are you going to solve the problem? Except for the banks that are having this deposit. And you know, exchange difference in accounting, you have the realized one, the unrealized one. Those who had balances, and their balances in dollars, that should have been 460 million naira, becoming 1.6 billion. They are fine, and that's why the banks are smiling. But the manufacturers, the real sector, they are all crying. And so, over time, what I have noticed with our country is that we've had a long time of mismanagement, orchestrated by incompetence, aided by corruption. That has been the issue. And if you go and check, and if you want to understand this mismanagement and competence issue, go and take the financial statement of NNPC 2022. Go to page 94. Go and see all the notes there. Go to note 38. Then you understand what I'm saying. Now, the second issue, which is a problem that I have seen so far, is that our electoral process and the process of selecting people in leadership has not favored the most intelligent people in the society. And this is the truth. And we all discuss it. We know it. And then the third thing, the fourth thing, which is the external factor, IMF, World Bank, and those funding terrorism to scatter Africa so that we don't become powerful. So these are issues that we need to address. So if you have a particular policy coming from IMF or the World Bank, you need to come home and say, as the symptom persists after 2 days, now the symptom have persisted after 1 year, then you need to consult the doctors.
Chief Economist, I think this is where you come. You really have to help us here. Because this symptom has persisted, as I said, over 1 year now. We were crying for reforms. We saw the reforms. The international bodies applauded the reforms. But one policy has, brought other consequences that are negative. So, I mean, you're Chief Economist, sir, so help us out.
Yeah, and I will start also from that, the idea of, if the symptoms persist after some days, consult your doctor. But again, I will kind of, let you know that may not be practically applicable in the economy in such a simplified format as you have given it. There are trade-offs, and nobody can shy away from that. And the introductions or interventions or implementations of policies are not such that when you do it, you quickly reverse it. There are end goals, there are planning. You must know where you are going to, and you must understand some of the challenges that you meet on the way. I understand also with you that the process of policy interventions in Nigeria is highly inefficient. That is taken, but when we have this type of the economy, and I want to look at it from the structural form, the key foundation. We are looking at the business environment. You have an economy that is growing for some years now, on the average of 1.5% for the past 10 years. You have such sectors that, apart from their contributions to GDP, not having the capacity to employ people. And you have agriculture that, seems to be the base of the informal market. So, in fact, you have the whole economy as being informal. The Nigerian economy can be termed an informal economy because you have more than 90% of the activities, the employment, and so many other business-related activities that are highly informal. So that in itself is a big challenge for any efficient, reasonable policy interventions or regulatory environment. So until we take it one after the other, the first one that I'm interested in is to look at the economic stability. As long as we have this economic instability, macroeconomic instability, there is no form of interventions, there is no form of policy regulations or whatever that will favor businesses. And that's a fact. You have a horse fighting between high interest rates. So you have businesses who are advocating that, okay, let this thing come down. You have inflation by the other side. You have the mercy saying, let this come down. So the point is, which should you go after? That's a cost.
Isn't there a way to get a balance?
No, you can't balance when you are in a state of emergency, when you are not stable. It's like driving. Are we
in a state of emergency when you look at our indices?
Yes, of course. And I mean emergency not in the sense of the core meaning of emergency, but in terms of the fact that our macroeconomy is not showing good things. So in such a situation, the government must be very purposeful And I think that's what people may not be really happy with. We need to see that clear direction and where we are going, and then everybody will be ready to bear the cost. But if you, for instance, if people are saying, okay, we are not interested in raising this, the MPR, we want this MPR to come down. Do you know the implication? Do you know the little gain we've gained? I mean, little gain we've had in this inflation. And then before you know, the inflation rate keeps going up. And from the research perspective, the impact of inflation on the economy is worse than that of interest rates on the economy. This is not to advocate for high interest rate, but I'm saying in terms of policy implementation and policy direction, there are some economic issues that you really need to deal with and make sure that this is done, thoroughly before you start branching.
Dr. Mishaki, a lot of people, even people here, would tell you, all this is just grammar. At the end of the day, can I go to the market and buy what I want to eat? Can the Naira have the value? So you continue to raise interest rate, and the manufacturers are suffering, the employers are suffering, and we say, so what's the essence of your focus if the people, as Mr. Kadri said, die before the benefit of the reforms?
Yeah, it's unfortunate. Really, just like Mr. Taiwo said, we are all on the same side. We are all, we are all Nigerians.
There you go, looking for comfort.
We are all facing this, and I think it's the understanding of what is happening that we may be, we may disagree on. If, for instance, if you have, we now have inflation rate around 32% on the average, but why do we have that? What is the implication of lowered inflation rate on more than 14 million Nigerians? They were, pushed into poverty arena in the last 1 year. What is the implication on that? So there are bigger welfare issues underground that, we may need to start talking to, that will also aid ease of doing business. I mean, for instance, when you have the poverty rate so high, you have the working poor, people who are even working, but who are still poor, so high, and you have the rate of informality in such a very high level, and the regulatory environment is not efficient. You are going to have the costs being borne by the private sector, and this is, of course, this is not called for.
So let's hear private sector. Neka, you are the private sector here. I know you are all on the same side. No, I see shaking of head now, but I think unless you were all on the same side, so I guess we are okay with this.
We're all friends. But we do not agree on symptoms are persistent.
Sorry, sir, let's hear what the employers are facing.
Well, for us, happy independence to Nigerians once
happy
again. And, I think that is safer with me, I think the first thing is to, someone said, if you find yourself in a hole, the first thing you stop doing is you stop digging. If you don't stop digging, you probably will keep going down. And the fact that you stop digging doesn't mean you are out of the hole. So you still have to find either rumbles, whether you have to still chop from the hole to get yourself to that zero level before growth or development or whatever you call it, before you start seeing the signs. And we seem to forget where we are coming from. We seem to forget how bad it was, or how bad it could have been if we had continued in that trajectory that we were before this administration coming. So those are the issues we basically need to deal with. And Digiman mentioned certain issues. Why things are very bad, why they are bad. We also know that government should have responded. This administration should have responded differently. While reforms are very necessary, we can't escape reforms now. Our options for reforms are almost tending to zero. They are the direction that we should go. But those reforms should also have been implemented with some level of consideration for the current situation of organized businesses and the current situation of Nigerians. As he said, you can't, I'm dying, and you promised me oxygen. So just get me the oxygen. Don't bring the oxygen when I'm gone. Because you bring the oxygen when I'm gone, it becomes problematic. So for us, and why I say Taiwo is safer with us, because so many issues that we have raised, we can see definitive action. We can see a system that is maybe slow in responding, but is taking conscious, definitive steps. We've had engagement on regulatory issues, regulatory inconsistencies. Sometimes regulators' roles overlapping. This regulator will say, this is my role. I've given you the certificate to do this. Another regulator will come and say, look, that certification doesn't apply to us. And that leaves the business in the middle. So those issues, we have raised it, and I want to commend PEBEC for the work PEBEC is doing. And Taiwo seems to be our go-to person. Once there is crisis, it's his phone that starts buzzing first. That, look, these are issues that I also need to look for us. So for us, let us deal with the inherent contradictions. If we don't deal with the contradictions inherently, then we're just going rigmarole. You have one agency of government promoting job creation, and you have another agency also creating bottlenecks to job creation. You have one agency of government promoting trade. You have another agency of government creating bottlenecks to trade. So if we don't deal with those inherent contradictions, then we'll probably be going in a rigmarole. And then we also have to deal with institutions. We've had serious issues with certain regulators that we can't but keep calling out. And it's not because those regulation is burdensome, but in the context of the implementation of those regulations, you realize that people create, either consciously or unconsciously, they create bottlenecks and they create distortions for organized business. So has it been rosy? Absolutely not. We're like, when you lose a business, for many individuals, and sometimes they've cannibalized organized private sector that, okay, you are focused on profit. But when a business closes down, we forget that maybe 100, maybe 150 individuals will lose their job. You forget that we have incapacitated the ability of a father to pay school fees. We have incapacitated the ability of a school proprietor to generate income. We have incapacitated the ability of the yam seller or the rice seller that the proprietor is patronizing to sell. We have also incapacitated the ability of the woman selling the yam to sell because there's distortion in cash flow. So it goes beyond a business losing or closing shop or a business reducing its capacity utilization. It goes far, far beyond. And until we start seeing it, the consequences of all this action, of a manufacturing business closing down, of a service business closing down, until we start tracking what exactly are the real consequences of somebody losing his job or a business closing down, then we'll still be caught up with the Nigeria. We have big potential. We'll still be caught up with the theoretical aspect of it. And these things are not rocket science. Yeah. As you said, they are basic things, low-hanging fruits, that the fruits are already on the floor. We just have to pick them up and just implement.
All right, I think we're going to task Dr. Adeoye to help us with perhaps the cost of these reforms compared to the benefits. But you have some time to think about that. Now, we need to take a break. When we come back, we'll continue this conversation. And the bottom line is that we really need to prefer solutions that are workable. The fruits are on the ground, but we still need to bend down to pick it. That's after the break. Stay with us. Welcome back. It's still Channels Forum celebrating 64 years of independence in Nigeria, a look at our economy. And this time we're looking at the ease of doing business, the reforms, the costs of those reforms, and what if we did not have the reforms? That's where we stopped before we went for that commercial break. Now let's find out what the numbers man has for us, Dr. Adeoye. Perhaps if we did not have these reforms, perhaps if on that day the president did not say subsidy is gone, perhaps things would have been better.
Well, let me say that I want to commend NNPC for what they're doing now. A lot of people do not know that PMS is being subsidized for us. I think about 200 and something naira on it. And that's why the position they are taking, that they are buying from Dangote and selling to other marketers, is actually to bridge the gap. I wish they could do more, because subsidy is gone may not be the right description. Is actually subsidy have been reduced. So I would say that if they could reduce further, which is looking at the low-hanging fruit that we talk about, because when you see the low-hanging fruit, DG, NECA, and the man said the fruit is already on ground, like Taiwo also said. But the most dangerous thing is if you don't have food in view, you can actually keep fasting and endure. But when there is a promise that this food is yours, then you begin to see the saliva, the movement, and you want to catch the food. That's why government need to now look at it and say, the promises that we are making, that comfort is coming, we then need to, government need to also bear additional cost. Look, I was discussing with Coleman before now. If you have, in fact, there's an investment that I was involved in a supermarket. Your 100 million has turned to 25 million. So what are you going to do? Because the items you're buying, maybe you are filling 4 racks. The same amount is now going to fill only 1. Automatically, the number of staff, maybe there are 50 or 60 there. You should be thinking of reducing it by 2/3, you know, 75%. So this cost is enormous on the part of the people. But there is light at the end of the tunnel. But only those that are alive to get to the end of the tunnel will see the light. If the light will be there.
If the light will be there.
So these are the areas we need to quickly look at.
I wanted to build on what he said. Perhaps the government needs to subsidize more and all of that. But there are those who have said the people are bearing the burden. Do we see the government bearing the burden? We've talked about the issue of costs of governance for a bit. And a lot of Nigerians say they are frustrated because you are telling us to be patient. Even today, I think the president did say we should be patient. But are we seeing those signs of patience? Perhaps if there was reduction in the cost of governance, some of those could be plowed in as subsidy for the people.
I totally agree with you. I think the reality of anything for anybody is, you know, they say leadership is by leading by example. If you tell me that I should tighten my belt, I need to see you to tighten some belt. It might not be as big as I am tightening, but at least I need to see a sign that you are tightening yours. So if I'm getting lean, you too have to follow. Now, but if you are getting fatter and I'm getting lean, I'll query your sense of direction. Now, that's the reality we're in today. Let's just say that everybody believes that you're telling all of us to be lean. Now, the reality, just what he said, on the case of a manufacturer, is even worse. That 100 million ton 25, believe me, 25 million cannot run inside that factory and make money to pay the salary. Because there's what is called a minimum capacity utilization of your processes, which you must match. If, for instance, a factory needs to run at 40% minimum to break even, if it goes to 25, it is losing money, because what is happening is that the material going in is being eroded by the overhead. Pure and simple. So for the manufacturer, you just see them run for another 1 year, 2 years, and shut down fully. There's no option. Now, we need to be practical in solutions, and let us drive solutions. Me, I'm not a believer in let's just keep knocking, and not prefer any solution. Then we don't know where we're going. The reality is, when a gap is created by working capital, you either find more money to close the gap, just like an O, or you find something else to close the O. The problem in Nigeria we have today is that between last year and now, we've got erosion of working capital. That's the reality. That money has gone. It's now worth a lot less. Forget it, with all due respect to the economics, it's too basic. You know, we follow some terrible trends. you know, we were talking about it earlier. The terrible trend we're following in basic economics, which says, and this is what we're following in basic economics, it says when your inflation is high, you start increasing interest rate to rebalance the liquidity position and let people spend less. So by the time I increase your interest rate up and up, you literally spend less, and that you start driving out inflation. Basic economics. In Nigeria, we're not a money-driven economy. How many people have mortgages here? How many people are taking overdraft here? It will work in an economy where it's money-driven, loan-based, finance-based, Europe economics, America,
Credit
Nigeria.
practice.
We're not a credit practicing economy. We're money that what you have in your house is what you spend. So if you drive up interest rate, it will affect maybe 20% of the sector, which really it will be the manufacturers. 80% of the economy is not. The person selling pepper at the market did not go to the bank to borrow money to sell the pepper. So if you increase interest rate, that has zero effect on that person. But it has a lot of effect on the manufacturer that is only 20% of the total 80% borrowing. So you're not making, so when we want to create a solution, for me, I look at the solutions that make more sense to me. Now, at the point, if you look at what happened at the last set of interventions that the CBN through BOI had to come up with, which was now try to inject money into working capital, inject money into brownfield, into greenfield, to close the gap. Now, if I bring in money at 9%, 10%, it's not being stupid. You're literally trying to close that 75% drop in working capital to just give them back leverage to go back to 40%. That means they don't sack anybody. First and foremost, all the salaries, all the capacity. So that's the first thing I would have done, is how do I get them to even hold position and not sack one person? So I create leverage of money that allows them to borrow money. CBN, I agree, should not be a banker to everybody. You have BOI, you have development banks in Nigeria that can do those things. Let them do it. And when they do it, we get a solution that eases that crisis. Then the last point of view is that we look at two scenarios. Which one affects us the most? Interest rate or FX? It's FX. If FX drops 50%, believe me, all of us, inflation will go up, whether you like it or not, because everybody will pass on that cost. Anything. So when we look at it, the focus of our, I think our fiscal policy and our monetary policy should have been, how do we balance the effects of FX? Now, if you look at what happened, at a point in January, Naira went to about 1,200. By February, it was almost going to 1,300. Then all of a sudden, by January, we're entering March, it was reversing to 1,000 Naira. And guess what happened to Naira? It divided woefully after that, because the wrong move that happened then, it was a monetary policy mismatch. Why it was a monetary policy mismatch? End of January 2024, what did we do? We sold bonds into the market at over 20%. Everybody came in. It was oversubscribed 300%. We did it again in February. Then all of a sudden in March, you now strengthen the currency 20% up. If I'm a businessman, I will sell your currency instantly and buy back the forex.
Dr. Bishaki, do you think there's a need to refocus on policies based on what Ms. Onofoko has just said?
Symptoms persist.
Yeah, well,
Symptoms persist.
no. To be sincere, it's a tough situation. Let's be, there is no way you can. There is no argument, and I hope that those in the policy arena also they will understand this. Even when you have a clear purpose, you know where you are going, you know the type of the economic problems that you want to solve. I believe we still need to have a kind of an idea that will help us to minimize the cost from the other side. He has mentioned typical case of the inflation and interest rate, and how the interplay between these also impact on our FX. Yes, of course, based on the CBN's evidence, CBN said as of June this year that the money in circulation now is about 5 point something trillion from 2.6 last year. June. So within a year, we kind of have maybe 50%, you know. So that, from the perspective of the CBN, is a huge problem. And I believe that is one of the reasons why the drive for increasing the interest rate, you know, has always been persistent. And of course, even when you are reducing, when you are increasing the interest rate with the aim of capturing the inflation, the challenge is still going to be there both ways for the business people, both ways. Even if you reduce the interest rate and the inflation is going at, just like I said, you have 100 million within 2 months. What you are having is actually 20 million. So it's a big challenge, and I think that globally, anywhere, what should be the most important thing is for us to see a clear signal. When the government shows the signal and says, I know what we're going through, but this is the approach, let's address this. While addressing this, there could be some little interventions here and there to ease the challenges, as I said, but I think that is the core of the problem, because if you have switched the thing now, the other way, we have low interest rates and we have inflation, it becomes a national problem. It affects business will be just wrecked. People will just, so it's a big challenge, and that's why I was referring to the macroeconomic instability. It's just a worry, but it's a big cost on the nation, and people will bear it. And so we hope we have more policy efficiency in doing this, so that we understand the cost on businesses, on people, on households. And finally, I think very soon the MBS will release the National Living Standard Survey. That will be for 2022-2023. And that will also help us to see the reality regarding businesses or household, inflation, welfare, and so many things. But above all, we hope that we know what we are doing as a nation and that we get out of this situation
and we'll
better.
see the lights,
yes,
you know, at the end of it. But let me come to Mr. Kadri now. At a time like this, they say you can make lemonade out of lime. I've had some conversation with some manufacturers, and they look at how, since FX is becoming a big challenge, can we re-strategize, use more of local materials, local products? I wonder if your members are imbibing this and if it's working.
Yes, I think to a very large extent, the rational choice for a manufacturer would be to prefer that you source your raw materials locally. Even though sourcing your raw materials locally also has its own challenge. I mean, it needs to be available. And we are even beginning to see situations where manufacturers are turning to farmers. You know, you are set up your manufacturing enterprise to be able to take in raw materials and produce, but you are backward integrating to producing your own. Yes, I mean, that could be acceptable, but you then need to incentivize that movement. I mean, you are aware of the insecurity that we have in the country, which has limited access to sources of raw materials. You also need a regulatory framework that makes it effective and efficient for you to do another round of investment. But I can assure you, to answer your question, that yes, manufacturers are backward integrating. We are having this in dairy. We are having it in most of the food and beverage industries. Most of our breweries now source their grains locally. And then there is also even the government understanding and incentivizing raw material sourcing. But then we need to make it in such a structured manner. And those agencies, some of them regulatory, that are supposed to facilitate, have turned to headmasters, you know. So you basically waiting. If the only instrument you have is a hammer, every object will look like a nail to you. So you do not support a manufacturer, for instance, to be able to produce, but you are just waiting for him to err. So the regulatory cost is very high. And the environment is such that you are not aided in terms of your capacity to expand your investment. You borrow at 35%. I mean, one should commend this administration for addressing that aspect, because in our last manufacturer CEO confidence index measurement, we saw that multiple taxation was already becoming an issue, and also that access to credit was rearing its head. So we have in the stabilization plan, for instance, the 1 trillion naira that should go to the sector. We already have the 75 billion that man is working effectively with BOI to be able to give. So I think we need such incentives. We should be able to assuage the challenges we are having with continuously raising interest rate. You've done it for more than 18 months plus, and you've not done any impact assessment on the productive sector. I think you need to be able to insulate that sector so that you can reflate the economy. There is no way, except you are manufacturing cocaine, there's no way you will borrow at 35 or 30% and be able to produce in an environment where there's depressed purchases from the average Nigerians whose disposable income has suffered the battle. But I must mention one thing. I think at 64, Nigeria needs an industrial policy. An industrial policy that guides the working of government as far as industrialization is concerned. It will guide how we negotiate our international trade. It will guide how the Ministry of Industry, Trade and Investment connects with finance, with the CBN, with national planning. It will basically define where we want to be, and it will guide our operations. Sometimes I just wonder why we have embassies outside the country if they can't conduct intelligence. For you to be able, so they should actually be giving KPIs on how much interest you are able to facilitate, either market penetration for our products or for people to come and invest. And we must repurpose our politics. There must be consequence for government officials who make policies that ruin businesses. I mean, you make a policy today, it becomes a disaster for industries, and government simply changes it, and you walk away. We don't have this luxury in the private sector. If you make a mistake, your business is gone, and you could destroy your property. So I think we need to see that movement also on the part of government. And I must say that policy coordination is extremely important for us, because you can't operate in such a way that you don't know what to expect tomorrow. The coordinating minister is doing a fantastic job trying to bring everybody together. But I think that there must be deliberate government policy that says that the economy is too important for us to play politics with. We should insulate it from all the bureaucratic bottlenecks and the politics which is not purposed well. I think we need to have some coordination that gives us what to expect, when to expect it, and what are deliverables. And when we are not delivering, we need to double back to check why we have not delivered, and then be able to follow through so that we all move in the same direction, the same way. I believe that could help us to get out of the current situation.
Yeah, you know, Mr. Kadri, as you were talking, what came to my mind is it the policy we need or the implementation? Because even in this administration, we do have an app that we're supposed to measure the efficiency and KPIs of ministers. We don't seem to have heard a whole lot about that. You know, so sometimes it does seem that we do have these policies, but actually making them impactful is another.
I think we can't say more that President Tinubu has done a fantastic job in allowing the private sector to work with the public sector to design what needed to be done. And I can tell you, the stabilization plan that we have has in it, I mean, one of the components is this committee on fiscal policy. So we have the policies already, but we are slow, like you said, in implementation. And I think the people have to urge Mr. President that time is of essence. We don't have to wait until you drive more people into the poverty bracket.
Maybe our employers will help us, NECA will help us to talk to the president, help us urge him for this implementation.
Well, I think that was closer to. So, but having said that, I think one of the beautiful things that this government have done, one of the renowned things that we think the steps they've taken, or the steps they've refused to take, is scrapping payback. You know, it's one of the beautiful things they've done is keeping payback. You know, I think it was from the last administration, and the payback is still doing some yeoman's job, you know, trying to also get the regulators to perform the role which they're performing. For me and for colleagues, even in the private sector with MAN, I think the stabilization bill is one of the things we think can change the narration. And it was also a positive for us when the committee was formed, the presidential committee. It takes an administration with some level of guts to get that kind of team together to actually review the kind of things they've reviewed, to make the kind of fundamental recommendations that they've made, and whether it was circumstantial or whether it was deliberate, the fact that the committee has worked assiduously and come up with those recommendations, which we have to a large extent adopted in the private sector because of the far-reaching consequences, positive consequences of those recommendations, is for us to now ensure that those recommendations, they don't go the way of the same policies that you mentioned. And that comes back to building institutions that I mentioned earlier, that beyond politics, I think it's also time that we start advocating for economic institutions that are independent, irrespective of a government that comes in. Because it's easy for a government to come in and set up a policy, and then another government comes in, the next day they say they don't want those policies again. I think institutions that can be sustainable, that is national in nature and insulated, it can be absolutely insulated from politics, but significantly insulated from the whims and caprices of politicians. I think that's the next advocacy that we should be having, so that whatever we gain now in this, if the bill goes to the National Assembly and by God's grace, it passed, because the labor law bill, we still have it. We don't even know where it is now. Whether it's at the Ministry of Justice or it's at the Senate or House, we don't know where it is currently. So that this same bill, this stabilization bill, will not suffer the same consequences. If we get this right, this bill right, passed, and those recommendations
and implemented,
we will ensure we'll be in the trenches to make sure they are implemented, and they are implemented. I think we will have positioned ourselves to actually navigate a trajectory of growth. How fast we'll accomplish it, I don't know, but at least
Mr. Ayodele has told us to be patient, yes? But Mr. Ayodele, if God keeping us alive, we're back here this time next year, what do you think will be counting as the gains of your committee?
Yeah, so let me say a few important things from the conversation today. So there are two very important policies of the government that people blame for the economic hardship. One of it is the fuel subsidy reduction, and then the flotation of the naira. And I think we have to come to a realization that the conversation or the debate should not be about whether those things should have been done or whether it would have been better if we had retained what we had before. That was not an option. Take the FS, for example. We're owing over 7 billion backlog. So it was actually a subsidy regime. FS subsidy regime was what we had. We had borrowed billions of dollars against our reserve. We're not even sure what the net was going to be. So the economy was collapsing. We didn't have the headroom to continue with that. I believe that if we had sustained that regime, we would be in a worse situation today than we are now. The subsidy reduction, if we had sustained it, the government was spending about 96% of their revenue just to service debt, and they were printing money to do everything else. When you keep printing money, the impact will be more devastating than what we have now. So that's also not an option. So the debate should be, are there other ways we could have done it, not whether we should have done it? I think that's very fundamental. If I want to sum it up, because I know our time is up, it's that the major problem we have today, the biggest challenge to the economy is the FX. If we can get FX to under 1,000, you have the impact everywhere. Inflation will come down, band A tariff will be maybe like half. You're going to have a lot of things would improve. What the data is showing us is that between June 14 last year, when Naira was floated, and now, we've actually received net inflow of FX. Yet our Naira has lost more value. So what we find is that we have significant illicit demand. You need to find a way to take that illicit demand out of the market so you can have only just legitimate demand. And the diaspora remittances of about 20 billion, we see about 4 to 5 within the official market. About 15 billion is being either externalized or finding its way to the black market. So the plan we're trying to do now is for the fiscal to complement the monetary to address this issue so that by this time next year, we have more good news to share, and not what we're planning to do, but what we have done.
Oh, looking forward to that, Mr. Ejele. Thank you so much. I mean, I wasn't expecting anything less. Great conversations we've had. I mean, you can imagine the eggheads that are here. But I have to thank you so much, Dr. Gbenga Adeoye, lawyer and chartered accountant, my numbers man, and then Mr. Onofo, Chief Executive Officer of Coleman Wires and Cables, and of course the tax man, Mr. Tayo Oyedele. Thank you so much. And our employers, NECA DG, thank you so much. Chief Economist, you had a difficult time today, but well done. And of course, the DJ of Man, Mr. Kadri, thank you so much. Really appreciate your time, gentlemen. Thank you for your time.